Hey guys, it's Sean at eMiniSchool. It's Saturday, May 8th, and I want to go over a couple charts from last week. I didn't really get a lot of videos done last week, so we'll just look at kind of the bigger picture and we'll break it down on the smaller charts. So on the Russell, the 60-minute, we've had a couple nice buy signals up into this level. Okay, this is the same level that when the ES hit that 1216 number that we emailed out that Monday, or actually the Sunday night right before the market opened on Monday, saying that the 1215, 1216 was hit actually Sunday night. But looking at this chart, we had a nice buy signal here. Okay, blue bars, indicator high, means this move most likely over. Look for correction. We corrected. Next buy signal up into this zone. So we have targets other than just buying green, selling red, like the 1216 on the ES. So let's go forward with this chart. We came down, we had a nice sell signal here. Now this is a 60-minute chart, so this is not our entry chart, but we want to trade the smaller charts in the direction of the 60-minute. Meaning if the 60 minutes in a buy signal, okay, we're not going to short the 3 or the 10-minute. That's counter trend. Okay, it's very important to have multiple time frame outlooks and really stick to that. You'll avoid, a lot of the counter trend trades. So trading counter trend, not only will you probably lose money on the trade, you're not in the trade with the trend actually participating where the profit is made. So and that's where most standard indicators like stochastics and MACDs and all of that, it will actually hurt your trading because everyone's taught when it's above 80, look to short, and what will happen is the stochastics will get pegged as these moves are happening. Okay, so you need more of a dynamic way of trading with the trend. Okay, so here's a short signal stop here. Okay, so you'll see like the 60-minute sell signal is a big sell signal. Okay, that's a 2 to 3 day signal. So we know once the 60-minute fires off short, our outlook, and we're going to trade the trend down on the smaller time frames. So continuous market outlook, it's very key. Okay, so it comes down, we start getting blue bars, indicators high. This is when the market just really fell apart. Okay, so using the blue bar stop method, we would be stopped basically probably right here. I mean, it went like one tick above. But the point is we follow it down with the blue bars to get us out. Okay, so let's look at the 3-minute chart. So this is the day that the market really fell apart. Okay, so we had a lot of emails saying, did it catch it? Everything like that. So number one, we had the 1216 a week ago, way ahead of time. We did that email on April 25th. So once that level's hit, we want to look for a correction to that level. So our outlook is down, but we want to wait for a signal to get in. Okay, so blue bars, indicators low, big move starting. Okay, comes down, you can play the blue bar breakout trade. Yes, it's higher risk, but that's catching the first move. So this is giving a heads up, bigger than normal move is about to occur. Okay, so on our instant messenger during the day, we around this level, we were waiting for this level to be hit. Okay, so to complete the correction, this red bar is the short signal. Our stop goes above structure here. Okay, so you can follow it down. Blue bar method, we would be stopped right here. Okay, so if you took this short from 690 and got stopped on blue bars here 673, that's a good trade. What is that, about 26 points? So right there, then this is a 3-minute chart. Okay, so bigger charts might not have had blue bars here, but our rule is the chart you enter on is the chart you exit on. Okay, so you're not entering on a 3-minute holding to a 60-minute target. Yes, we're going to know the targets, but it's very it's too hard because a 60-minute pattern takes multiple days to complete. And since we're day trading, we can't hold that over. Okay, we'll know the target, we'll still trade to that target. So it's always best to exit on something that happens consistently. Okay, did it catch the whole move down? No, because if we trailed the blue bars, we would have been stopped right here. Okay, if that wouldn't have happened, we would have been stopped right here. Okay, we don't know that this is going to happen. This is out of the normal. Okay, so we don't want to try to predict something outside of normal market conditions. We want to trade the patterns that repeat over and over and over. Okay, so if the rule is once we have a blue bar, we trail the stop, then that's the rule. We trail the stop, we get stopped right here. Okay, so really the point is not catching an out of the normal move. It's catching from here, from 690 to 673, and on a 3-minute chart, that's over 25 points. So that's the trade. Okay, not this wildness. Our rule is when this happens, stop trading. Okay, it's very, very risky. The market's moving way too fast, and you can blow out your account in one trade that was supposed to be a scalp trade turns into the biggest loss you've ever had. So it's not really worth trading. Okay, let's look at the ES for the same move. Blue bar, indicator low, big move starting. Okay, the chart looks a little bit weird because there's so much price down there. Same thing, short signal here, stop here, rides down, stopped here. Okay, so entry was 1154, stop was 1130. Okay, so 20 points. Okay, so you got stopped before the major fall. Yes, it would have been nice for the bars just to keep going lower and lower and lower and get stopped here, but that's not what happened. Okay, so we'll look at the ES 60-minute chart as well. 60-minute sell signal here. Okay, there was also some nice long signals like the Russell chart. Okay, 60-minute sell signal here. Comes down, and if you follow the blue bars, we would be stopped right here from this 60-minute sell signal. So if you're swing trading, 1203 short, exit 1133. Catch the meat of the move. Try not to get out right here because you can't do it consistently. So this is just kind of an update what the charts look like over the last 3-4 days. And tomorrow we'll do another email with a video with our outlook for the next week. Have a good weekend.